Hey, how's it going? So I just wanted to send an update today. So the Fed chairman came out and said they're going to hold rates at zero, which is what I said. I felt that they were going to. He said he was going to, even though you had other people in government, such as Janet Yellen, saying that it needs to bump up. I think he's doing the right thing, and I think what he's doing here, and we'll go through the article, one of the articles on Yahoo that talks about this a little bit. I think what he's doing here is really just waiting to see what transpires with this current administration, the decisions and the choices that they have made. Will their actions cause a cooling of the economy? And so are inflation rates really that big of a concern? If they increase interest rates and the actions of the administration this year so far causes the economy to sputter and there's not as much growth as we initially thought or thought, would he have to lower interest rates again? And so I think from my perspective, my opinion, which take it for whatever you want to take it for, I think he's making the right choice. Let's sit back. Let's see what's going on. And I'm going to go ahead and minimize myself here, and let's kind of dive into the article here. The article is by Brian Cheung. Fed holds rates at near zero, projects 2 possible rate hikes by the end of 2023, which is what he's been pretty consistent in saying. The chairman has been saying already, which is great. Now, he has also said they're still holding pat to doing asset purchase program of about 120, absorbing about 120 billion. So here's what's interesting: they're buying 120 billion assets, but they're also offering about 400,000 in government bonds that are being issued. So the Treasury is. So it's the Fed is buying 120 of those. So that's kind of balancing it out, and I think he's feeling that maybe this is good enough for them. And again, let's kind of see what this current administration's doing. He touches on vaccinations, fresh round of quarterly economic projections, let's see here, blah, 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 blah. Compared to the Fed's dot plots in March this year shows that the median member expecting no rate hikes through the time horizon. Now here's the interesting, the economic projections. This is I find extremely interesting right here. So the economic projections right here raised expectations for GDP growth in 2020 to be 7%. Look at that. A notch up from March projections. Okay? I actually think he wants GDP to go up. I believe he wants it to go up. I think he's okay with inflationary numbers because he'd rather have a greater GDP growth. But they still are going to maintain expectations of a deadline of unemployment of 4.5, which means that we're getting more people out in the marketplace, hopefully, knock on wood, right? So let's see here. Tapering. So again, they're going to continue to purchase the 120,000 a month mortgage-backed securities, which is the quantitative easing that they started back in 2008. It was a response to the mortgage crisis, and they're still buying these. Okay, so to me, that's a concern. Maybe they still see some issues within the mortgage world, because quite honestly, I don't know when the last time you got a refinance or something. Really, not a whole lot's changed. Now, the banks have tightening things up quite a bit because of COVID, but they're still getting more and more money. So now banks have liquidity issues, and with interest rates being low, which is why I think the Yellen wanted rates to go up, was because it would cause banks to release some of the funds that they're sitting on and causing this liquidity issue that they have. Let's see here. Fed still target is 2%, which we all know, right? We all know that that's their target for inflation, and we're above that. So really, other than that, not a whole lot. I just found it was interesting. I liked that he held tight. He's going to wait and see, which I think is an appropriate move. Because as we are now, you have more and more states, such as California, opening up and that sort of stuff, where you now are going to see maybe a little more increase in supply and demand, which may cause inflation to go up, but it may also taper out inflation as well. So the supply chain is the big issue. Are we able to get materials? I do think companies are starting to hike up pricing and price gouging because they can, because of the inflation numbers, which that'll hash itself out as well, with lawsuits and that sort of stuff. But from this article, from what the Fed did, I think it's a right move. Let's see what happens in a month. Let's see what happens as we get through July and the summertime, what happens with the economy. Remember, everybody's going to be, it's now summertime, right? Kids are out of school. We got some traveling to do and that sort of stuff. Now, you don't have a lot of areas out of the country opening up, but there's still going to be a lot of in-country traveling, and people are going to want to get out, and explore. So let's see what happens. And my name is Robert Wolf. I'm the CEO and founder of Terra Firma Business and Financial Consultants. I'm an asset coach and a tax strategist, and look forward to you go ahead and subscribe to this YouTube channel. Go ahead and hit the like button if you like these videos. If you want more, hit the notification so you can get updated when we do these videos on occasion. So thanks so much. Have a great one.